Hi, I'm Ash Bennington, Senior Editor and Crypto Editor at Real Vision. Thank you so much for listening to the Real Vision podcast. Today's episode is sponsored by Koch Industries. You know, when it comes to your next business read, you do have options. You could pick up that trendy, new, buzzwordy business book, or you could learn the timeless, buzzword-free lessons of a straightforward modern classic. I'm talking about Good Profit by Charles Koch, a CEO with a real-world track record of decade upon decade of actual exponential business growth. Want to learn the lessons from someone who's actually done it? Start by visiting goodprofitbook.com. That's goodprofitbook.com. Welcome to the Real Vision Daily Briefing. It's Tuesday, August 24, 2021. It's TG Tuesday once again. We've got a streak going with Tony Greer from the Morning Navigator back in the house. Here's what we're looking at right now. Looks like U.S. equity markets, it looks like at or near all-time highs, just green across the board. NASDAQ definitely appears to be at an all-time high right now. We're going to talk about these numbers in more detail with Tony Greer, but NASDAQ up over 15,019 right now here on the close. That's up about 0.5% or 77 points. Dow Jones Industrial Average also up 32 points to 35,367 on the close. S&P 500 at 4,486 here as the action settles down, up a little over 0.1%. NASDAQ Golden Dragon Index, which represents 98 Chinese companies, a popular way for U.S. investors to get exposure to Chinese equities, is up today. Looks like nearly 8.5% as we settle down at the close. This after losing 50% of its value in the past 6 months as the Chinese government institutes a regulatory crackdown, especially focusing on tech companies. Final story of the day at the lead. Tony Greer, you're going to love this one. The Poly hacker who promised, this is the Poly network hack, over $600 million for those who aren't familiar with it. The Poly hacker who promised to return over $500 million he, she, or they took from the Poly network. Well, they appear to have given it back, including the $500,000 reward for pointing out the bug. And also, by the way, he, she, they apologized for the inconvenience in one of their notes. Tony, this really is a strange new world, isn't it?
A crypto feel-good story, if we will. Right, Ash? Fantastic. Really cool. Really cool. There's so much going on in the world right now. We can barely keep up, right?
Yeah, we'll get to that more in a bit. But tell us, Tony, what are you looking at as you look at these markets?
Well, it feels to me like we're hitting a new power curve of the equity bull market, given we just got two major headlines yesterday. And we got basically two headlines out of China, one where they have zero COVID cases and another one where the PBOC is going to boost credit and stabilize money growth, which is a little bit of an easing turnaround from what they've been saying. The second headline you can't ignore is the FDA approving the Pfizer vaccine. To me, what that did was it woke up the muscle memory in the reopening rotation. Right, Ash, what have we seen in the last 2 days running now? Oil and gas bouncing off support, aggressively leading markets, right? The dip in price was short in time. It was steep in duration. Oil is now $7 off the low. Stocks are following suit. We had metals and mining follow off on energy yesterday. All of a sudden, copper is now bouncing off the 200-day moving average and starting to test moving average resistance rather than breaking down, which it had been doing in the last week. So the way I'm looking at it, last week we had this crisis in confidence that really kind of, to me, rhymed with the Afghan headlines and the sort of poor optics of that withdrawal. We had the same old formula for the bull market show its face again, right? The market pulls back from highs. We have a number of red days in a row where the market's down consecutively. We have one or two extreme tick index prints on the lows. We have a red to green recovery, and we retest the highs. Now, this just got, the retest of the highs this time got power boosted by that FDA Pfizer headline and the China headline. So to me, it feels like the market's muscle memory is waking up and we're going back to that rotation where we can have industrials like XLE and metals and mining rally. We can have gold miners rally because gold is recovering so well. And we've also got massive tech participation all of a sudden in this rally as well. We just had the Barron's cover that, asked if big tech could keep going. And it feels like it even felt like one of those Costanza headlines that you didn't want to be short against. And then you wake up Monday morning and tech keeps going. So now that we've got big tech rallying, we've got semis rallying because there's a chip shortage. We've got the sectors like social media that were on their way down rallying just because the whole tape is rallying. So, this is the very, very difficult part to fade. This is where I ask the people that are bearish the S&P, like, what's your plan now? Because it feels like we're in a power curve up to 5K, Ash. And I don't want to go on and on. I want to see what you want to dissect about this rally, whether it be the commodity side, equity side, or what.
Boy, it just sounds like there's lead back in the reopening trade now. When you look at these numbers, when you look at the run that we've been on the last couple of days here, what do you see in terms of key support levels for the broader market?
Well, the S&P, we barely grazed the 50-day moving average once again. It's like literally, it is like, I'm trying to think, it's probably the fourth or fifth episode in as many months, Ash, where the market backs off the highs and the S&P tests the 50-day moving average support level, whether it was on, the big Bitcoin de-risking, whether it was on the first headline inflation number we got, whether it was on the FOMC meeting, whether it was on this crisis in confidence we had last week. It's been the same formula in the S&P, which is a bounce off the 50-day moving average. So that's your number one level right now until that pattern changes. And, that's what I've been try to ride the bull market up. And I don't have all the technical levels for all the indices. I really don't.
Yeah, listen, talking about broad-based and talking about these indexes, just looking at it from a 50,000 foot level, looks like it's official high on the S&P as well. High on the S&P 500, close at record highs, S&P 500 and NASDAQ, just looking at across the tape here on CNBC.
Yeah, Ash, and we spoke last week a little bit about how Bitcoin, and I don't want to just switch the convo straight to crypto or anything, but obviously Bitcoin and Ethereum have been waking up and performing. And the one thing I just want to point out that I think is relatively important is that the last time technology sectors and Bitcoin were rallying together, they both went on a tremendous run. And it feels like we could be in a similar situation. When we came out of lockdown in March of 2020 through, call it the summer of 2021, the NASDAQ went from 7K at the low to 15K. So it doubled. And Bitcoin went from 6K at the low to 60K at the highs. And that was all, to me, it was every day, Bitcoin higher, Ethereum higher, NASDAQ higher, triple Qs higher, software higher, cybersecurity higher, right? And so now I look at it, and in my opinion, Bitcoin has done a lot of work technically. And now all of a sudden we're in this position where the technology side of the stock market looks really good again. And only really good in a sense, and I don't know what's going to derail it from here other than unless yields start moving up really rapidly and we have a dislocation lower in the bond market. And I'm not seeing any of that happen just yet either. So if we have a powerful tech-led rally where industrials also perform because of that reopening rotation idea, man, that's going to be a powerful S&P to try to hold back for the next couple of weeks, don't you think?
Yeah, absolutely. Very well said. As you were talking, I was looking at crypto prices. Man, talking about critical levels with a 5 in the number. Bitcoin now below the 50,000 number, but at 48,153. This is very strong. Ethereum still up over 3,000. 3,197 here as we do this live. But also things like Solana smoking over 70. Cardano up over 275 now at 280. I mean, this is up 40% in the last 7 days. This is perhaps a bit more idiosyncratic trade. This is on news that Charles Hoskinson, the creator, has announced that they are actually going to go live with the smart contracts. That means basically, in a nutshell, if you're not following these markets closely, Ethereum is going to have a competitor in the smart contract space.
Wow, that'll be interesting to see how that pans out, right? They've been pretty much the only one so far, right?
That's exactly right in terms of mainstream applications where people can write these smart contracts, deploy these smart contracts, and actually have the business logic live for trading all kinds of other applications. If Cardano, ADA is a real player in this, man, that would be one hell of a story.
Yeah, really. If it sounds like what was a monopoly gets broken up. I mean, we know how that can end once competition finally creeps into the ring. So we'll keep an eye on that one, see if it affects the whole crypto basket, as it were.
Yeah, and it also might be one of those things where it's like Roger Bannister in the 4 Minute Mile. Once the threshold gets broken, you see other people breaking the tape as well. And I suspect that will be the case on the smart contract side. These things take very long periods of time, years to deploy, but there are a lot of smart people out there who are working on these technologies, and they're coming of age. They're maturing.
Very cool. Very cool. I'm all ears to the crypto world.
By the way, this story, I don't want to belabor it, but the story about the hacker giving back the $600 million. I mean, for me, the $500,000 reward, these guys basically said, hey, give us back our money. We'll give you a $500,000 reward for finding the bug. He gave back the reward, and he gave back all of the donations that he received from his fans and just said, listen, I wasn't in this for the money. This was about pointing out the security flaw. This is about showing the world kind of my stuff, what I could do here, and looking at this and being able to analyze the code. So it is just a different space. It's a different ethos for people who say, maybe some of the investors who have a little bit more antiquated view of the world, shall we say, who say, nah, there's nothing new here. This is just more tech doing similar stuff. It's a different world. It's a different culture.
Yeah, I can tell, you're getting a great front row seat of it right there. I can tell with all the people in the space that you interview for Real Vision that, I grab, portions of where I can and sort of all of it if I can. But I mean, I can tell that you're getting exposure to every side of the crypto space. So, I mean, it might be time for Ash to open up his own crypto fund. What do you think?
Not without you, Tony. Not without you. That's what I think.
Well, we could do that. You can be the analyst and I'll be the trader. I mean, that's the old school model, man.
Angie's List is now Angie. Whether you need help with routine maintenance or you're planning your dream renovation, Angie connects you with top local pros who can get the job done right. See reviews, compare quotes, and book hundreds of projects. Plus, when you book and pay through Angie, we'll cover your project up to the full purchase price, plus limited damage protection with our Happiness Guarantee. Check out Angie.com, and for more on the Happiness Guarantee, go to Angie.com/happiness-guarantee.htm.
That sounds perfect. I should say, by the way, in terms of crypto stories, this other interesting one is CryptoPunks being bought. A CryptoPunk, there are 10,000 of these. This is an NFT. Elaine Lee and I are actually doing an update on this. I hope it's going to come out a little later today. But this is an interesting story. These limited edition NFT tokens, only 10,000 can ever be printed. Visa just bought one for $150,000. This is interesting. And what's really fascinating about that is that I believe the gentleman's name is Kai Sheffield. He's the vice president over at Visa, who's in charge of crypto and is a big NFT guy, basically wrote a very sophisticated and nuanced analysis of why Visa was stepping into this space. This wasn't just a one-off collector's thing. They're saying, no, we're really looking at this technology for how we can enable things like payment infrastructure, how we can do things for small and medium-sized businesses. I think it's kind of like one of those little milestone moments.
Oh, absolutely. I couldn't agree more. When you are, used to reading headlines in frontier markets and all of a sudden you hear Visa step into the ring, you have to sort of get your feet square on the ground and say, wait a minute, they what? Because, this is the kind of news that flies off of the Goldman Sachs institutional cryptocurrency desk that has been built around this industry. This is the news that you really have to pay attention to. And now I didn't get a chance to do the research yet, but I'm interested to read that article because that purchase was made, with the intention to dovetail the space, the NFTs somehow more, integrated into the Visa operation. So it'll be interesting to see whether they bought it just to say, okay, here's the functionality of buying an NFT. This is what it looks like. This is what it looks like to own it. And then maybe they, create another business out of that. But I'm all ears listening to, I'd like to keep an eye on Visa stock, which has been in a secular bull market, to see if this has an effect, positive or negative, and to see how the market perceives it there. Maybe Visa will be another, like Coinbase, another semi-proxy to the space somehow if they become the giant. And I'm thinking, many months and years out the curve, but who knows, man? They made the first purchase for a reason, and you got to keep an eye on them now.
Yeah, I got to tell you, if I'm any other electronic payments company out there watching this space, I want to play this defensively at this point because I'm afraid of my business model getting disintermediated.
Hell yeah, that's the risk right there. And so the disruption is going to be interesting to watch, right?
Yeah. By the way, talking about bull markets, I'm looking at the GICS sector breakdown for the day. Everything's green, man. Everything's green. Looks like utilities are off about 8 basis points, but basically across the board.
Yeah, it was. I think the market to me is speaking for Jeff Curry at Goldman Sachs, who came out with a call that was. King came out over the weekend or Monday morning, but it was along the lines of some calls that I had with clients last week while the market was under pressure. And what I was speaking to them about and also writing about was that I think in the end, the fact that these commodity markets are tight and there are supply disruptions, that's going to be the trade that continues to guide the markets. And Jeff Curry from Goldman Sachs came out and said, the tightness in oil, the tightness in copper, all of this is going to outweigh the Delta variant. And then the next thing you know, you get the Pfizer vaccine news and everybody in the market says, we're buying. Let's go. It doesn't matter what price, we're buying stuff. This is another leg higher for the markets. This is a break through the Delta variant, a look beyond variants, ad infinitum potentially. And so I think that the tightness in the commodity markets is what's starting to spill over onto the screens. I looked at my leaderboard today, Ash, and I had, zinc names, zinc, copper, soybeans, things that hadn't been on my macro leaderboard in a while. And all of a sudden they're taking the lead again. And I think that speaks to that underlying tightness that's there in the commodity markets. So when the authorities take the heat off the inflation trade and the commodities back off, what we just saw happen is really relevant because that speaks to the underlying tightness, the underlying demand, and the fact that people are literally buying all these commodities on dips. So that's a really bullish dynamic that just revealed itself this week.
Yeah. So tell me more about that. I know you're a big commodities guy, particularly on oil and copper. What are you seeing there on the supply side, on the demand side? What's driving the BTFD?
Yeah, well, the demand side really, I think this Pfizer vaccine approval is going to lead, the market is interpreting as closer to getting back to normal. And I'm not smart enough to know what that's going to mean on the other side of a vaccinated planet. But I think the market is looking at it as a step closer to normalcy. And I think that's super important. But what I look at in the commodity side is, copper, like nothing changed about copper and crude oil while their prices backed off with this commodity sort of mini dip that we just saw. Underlying spreads remained backwardated, which means that demand is in the front month, as we've discussed. That scenario attracts investors because you can be long the commodity with positive carry, i.e. get paid to hold the commodity. And so while that dynamic didn't change, all we did was we got a dip in flat price. What happens is people start accumulating on the dip because they've been buyers the whole time. When there's tightness in the market, you have two choices. You can either buy a spread to cover your short, or you can buy the actual commodity flat price. And it feels like that's what the markets did in both copper, aluminum, and oil. And gold even did the same thing, whether it was for the same reasons or not. But, gold got bashed almost down to 1650 when the Federal Reserve was sort of proving out their transitory comments and inflicting a dollar rally. And here we are back above 1800 in gold, where gold is saying, don't leave me out of the inflation conversation just yet, even though I'm lagging. So, Ash, there's still the fact that these dips in commodities are short in duration and steep in price should give you a lot of confidence that the next time central banks come knocking on the door of the inflation trade to say, okay, that's enough for now, start getting your bids lined up below the markets, because the dip is more than likely going to be short in time and steep in price again. So you got to be ready for it. That's what I learned from this last week or two.
Yeah. Talking about central bank intervention, it brings me to a point that I did an interview with Luke Groman recently, where he talks about precisely these points. Let's take a look at the clip.
Basically, these deficits are so big, just to keep the wheels on the cart. There's not any private sector balance sheet big enough to finance U.S. government deficits in a non-deflationary manner. And what I say by that is, the world could finance these deficits if it starts selling off other debt, junk debt, stocks, emerging market assets. If they sell other assets to raise dollars, they will have, is basically what I'm describing as the US government crowding out the world.
Right.
And that's where we are. And so that's where the monetary side comes in, which is the Fed has an infinite balance sheet. They can print the dollars to buy the treasuries. And so if the Fed does enough, then that will allow leverage in the system to keep expanding. Basically, the rest of the global private sector won't have to sell assets to finance the U.S. government. The Fed will finance the U.S. government.
Well, there you have it from Luke Gromen on the Essential Tier. Rising deficits on the fiscal side financed by central bank intervention.
That sounds like he's got the formula down, doesn't he, Ash?
Yeah.
When I look at one of the things that, I was concerned last week when the market dipped. Obviously, in a crisis in confidence, you don't know where that's going to level off, right? But if one thing kept me on the bull side without wavering too much, as I spoke to clients over the weekend, it was like, we're doing this talk about taper at the Fed, except the balance sheet continues to tick higher. So if the balance sheet continues to tick higher, then we have to expect the same mechanism to be churning underneath the markets, right? Like we're going to create some inflation and we're going to come after those trades, and metals markets are going to perform and commodities are going to perform. And, next thing you know, it's looking at that Fed balance sheet that ticks a new high that sort of gives you the confidence to say, yeah, well, we're buyers of stocks on this dip. We're buyers of commodities on this dip. But because of that mechanism right there, that should be dilutive to the dollar and it should be bullish commodities. So I think that's how the market is reading it, or at least that's how I'm interpreting how the market is translating that effect, if that's fair to say.
Yeah, very fair and very clear. I would just add, to your point, I wouldn't want to be on the other side of a Luke Gromen trade.
No, not at all. He's a sharp cat. I enjoy it. He's one of the people that I really enjoy listening to. He has a pretty stable and consistently fundamental view, which I really appreciate.
Yeah, and very well reasoned and thought out, really from first principles. Tony, I should say, lots of questions coming into us on the YouTube feed. We got some, I think, coming into us on Twitter, at Ash Bennington. If you want to hit me up on Twitter and ask some questions on Twitter, it looks like there's a John Farley who's asking questions as well. I think that's Jack Farley, who should be on vacation and enjoying his life, but apparently he is watching the Real Vision Daily Briefing.
Man works hard, doesn't he? What kind of questions do we have? Is anybody commenting on how good the feed is and how much better the internet connection is? Are there any comments like that, Ash?
Not yet, Tony. You know how TV works, man. People only yell when something's wrong.
Yeah, that's a good point. All right, what do we got? What are they looking for?
Welcome to the Real Vision Podcast. Today's episode is brought to you by OurCrowd. Do you ever wish you invested early in some of the best performing IPOs of 2019 and 2020? OurCrowd investors were, and now you can join them in what's next. With OurCrowd, accredited investors have access to invest directly, easily, and most importantly, early. OurCrowd investors have benefited from OurCrowd companies IPOing such as Beyond Meat, or being bought by companies like Intel, Nike, Microsoft, and Oracle. Professional VC research identifies promising companies and funds across a range of sectors, stages, and global locations. OurCrowd is investing in medical technology, breakthroughs in ag tech and food production, solutions in a multi-billion-dollar robotic industry, and so much more. And you can learn more and get in early at ourcrowd.com/real. If you're interested in investing, you need to join OurCrowd. An OurCrowd account is free, so just join ourcrowd.com/real. That's OURCROWD.com/real.
Okay, so here's the question. Is a $3.5 trillion spending bill definitely going through? If so, when? I know that's a tough one to predict, but let me also add to this. This is coming to us from CG, which is, how do you think about a spending bill like that? Leaving aside for a moment the plausibility of it, when you see something like that coming down the pike, what does that do, if anything, to the way that you think about markets, or do you just wait to see it in the tape?
Great question. Ash knows the answer. My lizard brain isn't capable of thinking enough to figure that out, what the $3.5 trillion is going to mean for each sector. So what I do when I see the $3.5 trillion, bomb come across the tape like you, I sit up in my chair and I say, okay, what did the market just say to that? And because certain things, when they hit the market for the first time, like, the announcement of a stimulus bill announcement that it's getting passed, incrementally, however the news gets parsed out over the tape, it's always my reaction to say, okay, what's the vote on this? What is the market voting? Are they voting with their feet? Are they running from this headline? Or are they running into the markets on this headline? What are they doing in commodities? What's the bond market doing? And that's really, when you come down to it, that's the nuts and bolts of tactical trading. Anything at any level, it's looking to see what the response is to news. So for me, for a stimulus bill, like I said, I'm not smart enough to figure out what that means for all these sectors of the market that we can trade now. So I take clear and crisp notes on the 2 or 3 days after that gets released, and I decide what the market's telling me. It looks to me like, it looked like the commodity trade wanted to take a little bit of a nosedive, a little bit more, I guess, a steeper magnitude than we saw. But the reality is that these stimulus bills are going to get filtered out into the market, and they're going to finally, reach their destination, and they're going to cause a little bit more business activity, and they're likely to cause a lot more inflation, like the rest of the debt that we're piling on. So that's the way I think of it. Number one, look at the market and let it tell you. And number two, fit it right into your fundamental view of more debt, less debt, good for the markets, bad for the markets. How does the market take in the news and react from there?
Yeah. Here's a nice, simple nuts and bolts question. I love these questions. They're simple. The question comes to us from Joe C. You're talking about all of the bullish sentiment that you see. He says, what's Tony long right now? And what's your favorite one?
Provocative question. My book is fully out in the open on the view matrix of my newsletter. So that's something where my positions are listed, and my personal account usually matches that or is some very close lookalike to that. So what I've got on the books right now is my more. I guess I'll talk about them. I'll just group them long some agricultural ETFs, because I think that there is going to be serious food shortages at some point, and I think that we're in a very much secular bull market in grains. So I've got plays like DBA on. I just bought some AgCo on the dip because I think that's a good expression of agriculture, where agriculture meets industrial. It's an ag farming equipment company. So I think that one's going to have a good next couple of weeks and months. I've been long oil, just basically oil for forever, essentially, or at least over a year now, since the dip to zero. I'm looking for a place to get back into energy stocks, although I'm not in any right now because I got shaken out in my trailing stops from the highs and managed to take a lot of profit on those. But I'm getting very close to dipping my foot back in the water. And I also like financials because I think the yield curve has been about depressed as it's going to get. And one last one is I like Coinbase in the cryptocurrency space, and that's where they've been proven to be really good inflation hedges. And I think the Coinbase IPO may have bottomed recently, just from my experience trading IPOs through their narratives and price action, et cetera, et cetera. I just think that's a good short-term bet for me if Bitcoin is going to make its way higher. So those are some of the things I'm looking at, but I write about them every day in my newsletter.
Yeah. Morning Navigator. Here is one we've never seen before from Per Bjurman, a good Swedish name. And the question is, how will the Swedish krona do against the dollar in the coming months?
Not smart enough to figure that one out, my man. Although I will say, if I just could add a dollar comment that may help, I'm looking today at the Aussie dollar, at dollar Canada, at the dollar index, at the euro, and I am out of reasons to be bearish the US dollar. It's unfortunately, although I think that it is dilutive to our purchasing power to be expanding our debt pile the way we are at such a ferocious pace versus the rest of the world, I am amazed at how well the dollar is holding up. So I can't really be that bearish the dollar anymore when it's off the 80 handle into the low 90s, above moving average support, and starting to really put pressure on the dollar bears. So that's one thing that I'll say about the dollar. The charts are really starting to look the same to me, and it looks like the dollar is having a serious technical breakout that as a trader I cannot fade, even though I'm not bullish.
Yeah. Let me ask you a follow-up to that one. It's one that interests me because I love thinking about how you think. If someone comes up to you and says, hey, Tony, you got to take a look at this chart on the Swedish krona. You need to take a look at this. Something there is happening. What would be the first thing that you would look at on the krona or any other currency when you were just trying to get your head around what was happening on something?
Yeah, Ash, that's a good question, and I have to say that and just to back the conversation, because it's a good question about trading, is that I got a lot of experience in that as an execution trader in equities, right? Because what happens is you are getting hot potatoes thrown at you all the time, orders that you've got to execute. And the idea is that you catch an order as a human being and that you can do something smart versus the markets, right? So you develop the skill of being able to take a look at something first from a sort of micro perspective, just to see what's going on in the last couple minutes type of thing. And then from a more macro perspective, where you zoom the lens out and say, okay, where is this trading now in context to where it's been? Like, where did it come from? Right? Is this thing trading at 5 because it just collapsed from 50? Or is it trading at 5 because it just chooched its way up over 5 years from $1 to $5, right? The path of arrival is everything to me. And then so once you establish that and you can establish what direction the security is trending, Ash, then you can start at least making, applying some technical analysis tools, some moving averages, some trend lines, and some really basic stuff to start to say, okay, if this thing is trending, then it should bounce off of this level and this level and this level and this level on its way to higher prices. So it's all just a matter of perspective, and it's kind of like zooming a lens in and then out and seeing where things are.
Yeah. By the way, talking of the direction that something comes inbound from, the Per Bierman question was from Twitter, and we got one more from Twitter that I'd love to hit before we cut out for the day. This one comes to us from Bugs, and the question is, what's your outlook for iron ore?
Great question, Bugs. I unfortunately have a lot of questions in iron ore like you do right now, right? I've been a bull. I've been, just on the technical trending, the way it's been trending so much higher. We got to 1,000 yuan per metric ton, somewhere around the highs. China came out and clearly said that, they put out some commodity rules that took iron ore, they backed it right off below 800 yuan per metric ton, right? So that's a big pullback off the highs. We've got to decide where it's going to go now. But if I'm going to think about how to think about that trade, I'm going to kind of remind myself of Jeff Curry, who's saying that the tightness and the demand underneath these commodity markets is likely going to outweigh the weakness we've just seen because of the Delta variant and because of China's sort of light commodity crackdown. So my guess is that while it's not going to be a linear path, I think that the price of iron ore remains pretty elevated. I think that China's still a big buyer. I still think that as long as steel prices remain firm and we remain in this reopening type of rotation, it's impossible to count iron ore out, even though China is trying to keep a lid on it. Those are my best guesses right now at iron ore, if that's fair.
Yeah, very well said. By the way, I'm glad we got to get to these questions from Twitter. I love seeing questions come in from Twitter. Super fun. Loves this sort of interactive format that we're doing here, which is just perfect to have with you on the show today. Talking of which, Tony, as we get to the end here, final thoughts for the viewers today.
Oh, man, we spent last week testing the downside in markets. We got another set of low tick extremes where we know that there was a lot of selling going on. We grazed the 50-day moving average on the lows. We had that red to green day. We've got massively positive headlines on the tape coming out of the US and China. My only inclination right now is to make sure that I'm not short anything that's going to hurt me, and make sure that I am loaded up on the stuff that I think can climb to new highs while we're in this power curve of the S&P trade. So as long as I get to Friday, which is still a couple of days away, but as long as I get to Friday and the performers of the week are still energy stocks, metals and mining, industrial stocks, technology, Bitcoin is bid. If those things are still in place, then for me, the door is open for a power curve trade and on the upside in the S&P. So that's kind of how I'm playing things right now.
Yeah, Tony, you always say it clear, but man, that is just crystal clear on the bullish outlook.
Good, man. I'm glad that it makes sense, man. I'm hoping that the things that come out of my brain translate to other traders out there.
Well said. That's our wish for everyone, right?
Yeah, totally.
Tony, thanks again. Always a pleasure to have you.
It's great to be here, Slash. Let's keep the streak alive, all right? I love it.
Streak alive. I love it. Thanks for watching, everybody, and thanks for the questions on Twitter and on YouTube.